So if you're given this kind of information, for us to measure risk, ladies and gentlemen, the first thing we shall do, remember this is advanced management accounting. So the first thing we have to do here is to come and get expected value. So in this case here, give me expected value. So give us expected value of X. So expected value of X, of course, I know you and I, this is quite something that is quite simple for us. Expected value of X, I'll come and take the X values, multiplied by their corresponding probabilities, and then we do what here? We sum, like that. If that is the case, ladies and gentlemen, then this one here will be 10 times, we're multiplying. So we have here 10 times 0.3, or 20 times 0.2, or 30 times 0.5. Could you kindly give me this answer, and then I'll be able to draw your attention to a very great past paper question, a very great past paper question, very great past paper question, very great past paper question. So Esther Paul tells me 22. Esther Paul tells me, is there somebody else who is able to see that 22? Akiangalia wanaangalia teka swali karahisi, hata wanipatii figures. Hata wanipatii figures, wanipatii figures. Wanipatii figures, wanipatii figures, wanipatii figures. So umesema 22. Thank you very much. Now, ladies and gentlemen, having gotten this particular figure, that is not how we measure risk. This is basically an expected what here? An expected value. So once we get this expected value, the next thing that you're supposed to be thinking about will be, the next thing you're supposed to be thinking about is the standard deviation. The other group, haikuwa imepata message, ndio wamepata saizi. So wacha waingie jameni, wacha waingie jameni. I was wondering how comes today wanafunzi ni wachache hivi. Hatujazoea kufunza wanafunzi wachache? Hapana. Hapana. Hapana, si tunafunza wanafunzi wengi. So come here and they give us the standard deviation. Come here and they give us the standard deviation. Yeah. So wanafunzi wale ambao wamejoin saa hizi, poleni, it was some miscommunication. So what we did while we were waiting for you, we had a very small example here where we have X versus probability. Then we have 10, 20, 30 versus those probabilities. And then now what, of course, this examiner wants us to do is to measure risk. To measure risk, how do you normally measure risk? We normally measure risk, ladies and gentlemen. We normally measure risk, ladies and gentlemen. We normally measure risk, ladies and gentlemen, by looking at the standard deviation. By looking at the standard deviation. By looking at the standard deviation. So already we have been able to get expected value. We've been able to get expected value. Then these values here, how do they, what is their spread from the mean? What is their spread from the mean? Please come and give us their spread from the mean. So spread from the mean, that's what we call standard deviation. So how do we get standard deviation, ladies and gentlemen, over our X here? To get standard deviation, ladies and gentlemen, what I'll do, I'll come and take my X values minus the X bar. This expected value, by the way, is also known as what here? X bar. The expected value is also known as the X bar, is also known as the X bar. So then to get standard deviation, deviation means that you're subtracting. So I'll come and take X minus X bar, and then I do what here? Somebody, I square. X minus X bar squared. And then, of course, I'll have to come and attach what here? Probability. Probability. Don't forget, ladies and gentlemen, that these deviations are many. There are many. So then what we need to do is to come and ascertain the summation. And then at the end of the day, my greatest friends, we must come and put what here? A square root. We must come and put up there a square root. We must put up there a square root. So if that is the case, could you kindly come and create a column for me here, which is x minus x bar squared times probability. X minus x bar squared times what here? Times probability. X minus x bar squared times probability. So then what do we have here, my friends? I know somebody must be wondering, how comes you're doing this kind of a simple question? We'll be able to see, I'll take you to a past paper and you'll be able to realize that these are questions that features in almost every sitting. As simple as it may look. Go to inventory management, it's a question, ladies and gentlemen, that features like in every other sitting here. So, ladies and gentlemen, what we do, x minus x bar, then this will be 10, 20 minus, or rather 30 minus, x. These are the actual values. X bar, ladies and gentlemen, x bar is our mean, our 22. So come and put x bar doesn't keep on fluctuating. X bar will remain what here? X bar will remain the same. X bar will remain the same. So, ladies and gentlemen, if that is the case, after I do my squaring, I need to come and multiply with what here? With probability. So probability, multiply with probability. Multiply this with probability. So could you kindly give us figures there? Kindly give us figures there. Kindly give us figures there. Kindly give us figures there. Kindly give us figures there very fast. Give us figures there very fast. What do we have, somebody? What do we have? Unasema open brackets 10 minus 22 close. Square times 0.3. You give me a figure. Give me a figure. Give me a figure. Oh yeah. What figures do we have here? Eliman niambia 28.8. The first one is 28.8. The second one, oh yeah, I'll talk over open brackets here, 20 minus 22 close, squared times 0.2. What figure do we have, somebody here? What figure do we have, somebody here? What figure do we have, somebody here? First one, Juliet amekataa, anasema ni 43.2. Juliet amekataa, amesema ni 43.2. Someone please help me out here. The first one, Esther Paul has confirmed it's 43.2, just like what Lynette has done. How about the second one? I think it is the one that Lokai was giving us, which is 28.8. That is the second one. And then now Juliet tells me that the last one is supposed to be 0.8. I doubt. The last one. Esther Paul tells me that the last one is supposed to be 72. They are getting different answers. Why? So this second one, I'm told, is supposed to be 0.8. And they could be correct because you see it is 20 minus 22, which gives me minus 2. Minus 2 squared gives me 4. 4 times 0.2 gives me 0.8. 0.8. Please check your workings, check your calculator. And then now straight away, ladies and gentlemen, you'll be able to come and give us the last one. So make sure that the last one is correct. Which question, please? We've just copied this question, a very short one here, a very short one there, a very short one question, a very short question. You don't even have to copy it. The last one is 32. So according to this formula, then they want us to come and do the summation. They want us to come and do the summation. So could you kindly sum for us? Talk of 43.2 plus 0.8 plus 32. Give me an answer. Give me an answer. What do we have there? Give me an answer. What do we have there? What do we have there? So somebody says it is 70 what year? It is 76. It is 76. Somebody tells me it is 76. When you add, we have 70 what year? 76. So 76. So if that is the case, ladies and gentlemen, please remember at the end of the day, what they want us to is to come and give them the square root. So then what is this standard deviation? What is this standard deviation? Somebody, what is this standard deviation? Somebody, what is this standard deviation? Somebody, wanasema at the 8 point what here? 72. The 8.72. Something that I'm so sure wanafunzi wangu wakipata iko exam watang'ara nayo sawa sawa kabisa. Lakini wengine hapa ukienda kwa May 2019 most of them hawakung'ara nayo. May 2019 most of them hawakung'ara na hiyo question. Ukienda kwa May 2019 most of them hawakung'ara na hiyo question. Ukienda kwa May 2019 May 2019, there is a risk assessment question there. Are you able to see that question, ladies and gentlemen, May 2019? May 2019, are you able to see that question on risk assessment? I think it's question number 4, somebody. We angalia vizuri May 2019, I'm not so sure of the question. Lakini kuna swali alituletea rahisi sana, ilikuwa mambo ya assessment. Just check for me, which question is that, somebody? May 2019. May 2019. Hiyo inakujaje May 2019? I know how to get that question. May 2019, I know how to get it. I know how to get it. I know how to get it. May 2019. Question number 4B. May 2019, question number 4B. Are we there? May 2019, question number 4, boy. May 2019, question number 4, boy. May 2019, question number 4, boy. Tushaipata kweli ama bado? Leo mmenyamaza woye. Na vile emeni rahisi wamenyamaza woye. May 2019 hawaongei hata. May 2019 wameipata eh? Now, ladies and gentlemen, they gave us some X values there. They gave us some X values there. May 2019. May 2019. Question number 4. Is it question 4 or question 1? Question number 4B. Wakatupatia X values. 105, 107, 110, 121, 125, 126, 142. Then we have 158. 158. Is there somebody who is able to see that question? Can't see it. Lazima kuna mwanafunzi ameiona hiyo question mahali. Atusaidie jameni. Ni question number gani hiyo somebody? Ya May 2019 ambayo iko na probabilistic distribution. Hebu saidia sisi. It's November 2019, question number 1C. November 2019, question number 1C. So already we have the X values. And then what they have done, they have given us the probabilities. They have given us the probabilities. The probabilities for this particular one. So probabilities, what do we have? We have our probabilities, ladies and gentlemen, here, which are quite interesting. Our probabilities are 0.05. We have 0.10. We have 0.08. We have 0.12. We have 0.14. We have 0.16. We have 0.12. Kuna 156 mahali, yes. Alafu 158. So kuna 0.18. Alafu kuna 0.05, like that. 0.05. Now, could you kindly do me a favor And somebody share that question on WhatsApp. Can you share that question, the question itself on WhatsApp, so we can read the entire question? Is there somebody who is able to share that question on WhatsApp? Is there somebody who is able to share that question on WhatsApp very first? The question on WhatsApp very first. You want to read the question, you want to read the question, you want to read the question. You want to read the question. Mary ashashare tayari. Yes. Question number 1C, share in the meeting. So question number 1C wanasema fair deal. Fair deal, that is November 2019, question number 1C. Fair Deal Limited uses a third-party delivery service to deliver goods to their customers. The current average cost per delivery is shillings 125. The current cost per delivery average is shillings 125. Fair Deal Limited is considering establishing an in-house delivery service. A number of factors could affect the average total cost per delivery for the in-house delivery mode. The table below shows the possible average total cost and the probability of each one occurring for the in-house delivery mode. So I have my average total cost, which is my X, which I don't know how it's going to behave like. And then I have my probabilities. So they want us to give them the expected value of the average total cost based on the above probabilistic distributions, ladies and gentlemen. Then how do we get this X bar? Given the probabilistic distribution, for us to get X bar, we shall come and talk of summation of X values times their corresponding what here? Probabilities. Times their corresponding probabilities. So to get, in this case here, X bar, ladies and gentlemen, we shall come and talk of sum of X values times their corresponding probabilities. So then what you need to do is to come and give us a column here for XP. So please, with speed, could you kindly do the multiplications here very fast, and then you give me figures with speed. So tell me 105 times 0.05. What figure are we getting, somebody? What figure are we getting, somebody there? What figure are we getting, somebody there? Please saidi. Na hiyo sichukue najua makosa wanafunzi wengi hufanya sana. Nitakuonyesha makosa ambao wanafunzi wengi, over 50% of the students, wanacommit hiyo makosa. Kwa hivyo wa kwanza ananiambia Esther, ya kwanza ni 5.25. Ya pili je, 107 times 0.1 inakuja ngapi, somebody? 107 times 0.1. 107 times 0.1. Wananiambia ni 10.7. 10.7. Ya tatu je, ya tatu je, ya tatu je, inakuja 110 times, inakuja 8.8. Ya ine j, ya ine j, 121 times 0.12. This will give us what figure, ladies and gentlemen? 14.52. So 14.52. Endelea namna hiyo, endelea namna hiyo, endelea namna hiyo, endelea namna hiyo, endelea namna hiyo. 125 times 0.14 will give us 17.50. Thank you. 126 times 0.16. 126 times 0.16 gives us 20.16. From there, we have 142 times 0.12, which will end up giving us what figure? Okay, I want figures. 17.04, 17.04, 156 times 0.18. 156 times 0.18. Wanaambia 28 point what here? 28.08. Ya mwisho j, ya mwisho j, ya mwisho j, patapotea 7.9. And then at the end of the day, what I expect to do is to come and ascertain what here? To ascertain the sum of XP. So could you kindly add everything there for me? Give me the summation of XP. Give me the summation of XP. Itakuwaje? 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 Summation of XP. Itakuwaje jameni? Somebody is telling me it is 150. 150 point what here, somebody? 150 point. 150 point. Let me see. 129.95. 129.95 is correct. 129.95. 129.95. So remember that this X bar is normally applicable to each one of them. X bar, ladies and gentlemen, normally X bar doesn't keep on fluctuating. So if I create a column here for X bar, it will be the same throughout. 129.95, 129.95, 129.95, 129.95, 129.95, 129.95, we have 129.95, 129.95, we have 129.95 like that. So that is the X bar. Ladies and gentlemen, what I'm supposed to do is to come and, of course, we have answered the first question. If I'm not wrong, the first question, ladies and gentlemen, that they asked us to do was about ascertainment of what here? Was about ascertainment of expected cost. The first thing that they wanted us to do was to get the expected cost. Roman 1, expected value of the average total cost based on the above probabilistic distribution. So the expected delivery cost is 129.95. The expected delivery cost is 129.95. That is the same as X bar. So that one, I'm so sure that all of us would have gotten that correct, isn't it? That one, I'm so sure that everybody would have gotten number 1 correct. Kweli Mwongo, number one. Number 1 is very easy. Expected is all about doing those multiplications. And then I come to number 2, where they want us to evaluate the decision that the company's manager is likely to make based on the average total cost in C1 above and the current average delivery cost of 125 per delivery, assuming that the manager is risk neutral, risk averse. And then we have got risk what here? Seeker or risk taker. So ladies and gentlemen, what I need to do very fast is to come here and measure risk using what is standard deviation. So risk, unless you're told otherwise, we normally measure risk using standard deviation. So the question then boils down to, how do we get our standard deviation? Is there anybody who remembers the formula of standard deviation? Yes, I know that standard deviation of X here will be X minus X bar, the difference. Sum of squares, so squares like that, times probability. There are many you can come and sum, and then at the end of the day, you need to come and give us what here? The square root. Give us the square root. So please create a column here where you'll give us X minus who? X bar squared times their probability. Please, I've always seen so many students using this column as X bar. They end up getting 0 or 3. It is X minus X bar. It is 105 minus this. Whatever we get, we square times probability. And then you give me the first answer in terms of 2 like this, decimal places, 2 decimal places, 2 decimal places. So we have here X minus X bar equals whatever I get, I square times probability, And today, Mr. David Kuria, you are so quiet. You never spoke when we were doing AFM, the whole class. And here you are planning never not to speak at all, quite bad. So then this one here is 31.1. I want 2 decimal places for the sake of moving fast. 13. How about the second one? Oh, you weren't in AFM's class. Sorry for that. Then there is another David here then who was very quiet. Yeah. I want 2 decimal places, 2 decimal places. So the second one, and it gives me 52.67. 52.67, thank you very much. The third. How about the third? The third, what do we have there for the third? For the third, what do we have there? Somebody, the third. They are not talking the third. How are we doing it? We'll take the third X figure minus this. Whatever we get, squared. So 31.84 31.84. Please go to the fourth one. Go to the fourth one, the fourth one, the fourth one, 9.61. How I wish somebody could shout the last one, the second last one. Those are the students I like. The last one, the second last. So that is the fourth one. How about the fifth one? The fifth one, Juliet tells me, is supposed to be 3.43. 3.43, fifth. Thank you very much. Sixth. 2.50. Thank you very much. 2.50. The seventh one. 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 What do we have there? The seventh one. What do we have there? Somebody. The seventh one. What do we have there? The last one is 39. The last one. I'm being told by somebody here about the last one. I have to go back a little bit. Somebody tells me the last one is 39.34. 39.34. And then somebody tells me that this one is supposed to be 17.42. Now we are on the second last. On the second last. The very second last, Julia tells me 122.15. 122.15. And then, ladies and gentlemen, as per this formula, we're supposed to come and add everything. As per this formula, we're supposed to come and add everything. You're supposed to come and add everything. You're supposed to come and add everything. You're supposed to come and add everything. So when you add everything, what are we able to get? Somebody here? Is there somebody who has been able to give us the total? Is there somebody who has been able to give us the total? And I hope this time around, my whiteboard is a little bit clear. You're able to see my whiteboard. I hope you are able to see my whiteboard. Juliet and Rita, they are giving me a figure of 310.09. 310.09. It doesn't stop there. Remember what this examiner wants us to ascertain, ladies and gentlemen, is the standard deviation. So if it's a standard deviation, then at the end of the day, standard deviation of X, I have to take the square root of the variance. 310.09. So could you kindly give me a figure there? So they're giving me 17.61. Now let's try answering the question of this person here. So they wanted us to do very simple things. They wanted us, number one, to evaluate the decision that the company's manager is likely to make based on the average total cost in C1 above and the current average delivery cost of 125 per delivery, assuming the manager is risk neutral. So we start with risk neutral. Okay, but I hope you guys are written this. Are you okay with this? Yes, thank you very much. So if it's risk neutral, we normally advise them to use risk neutral. We normally advise investors who are risk neutral to use expected monetary value. So risk neutral, always use EMV. So remember, we have got two costs. We have the current, which is two costs. Expected costs. So we have the current, and the proposed in-house. So in-house, expected cost of in-house, you are the guys who gave me a figure for the in-house, ladies and gentlemen, for the in-house, the expected, you are the ones who gave me a figure, mukaniambia, woye, and the expected, mukasema, was it 219 or something? 129.95, thank you very much. 129.95. And then the currently, these guys are incurring 100 what year? 25. So somebody who is risk neutral will always go for the best EMV alternative. The very best EMV alternative. So between the two, which one has a better expected cost? That if we work with the current, our expected cost will continue being 125. If we go for in-house, our cost will be 129.95, about 130. About 130. So in this case, ladies and gentlemen, this one here is optimum. Remember, cost, the lower, the better. So then if this person is risk neutral, we are going for the better EMV, which in this case here is to remain with the current. With the current delivery mechanism. Current delivery mechanism. That is risk neutral. Risk neutral. Risk neutral. Great. 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 So risk neutral, you advise them like that. Ladies and gentlemen, after that, we go to somebody who is risk averse. So risk averse, this is a person who fears risk. A person who will always work with an option that has got what here, somebody, the lowest standard deviation. So risk averse, always lowest standard deviation. So for risk averse, ladies and gentlemen, we have the current, and then we have the in-house. In-house is the new. Okay, so ladies and gentlemen, here we are. So remember here we are using standard deviations. For the in-house, you give me some particular standard deviation, which unfortunately I have forgotten. Which unfortunately I have forgotten. Is there somebody who can remind me this? Standard deviation of in-house. 120. No. 17.61. 17.61. What if we decide to stay with the current system? What if we decide to stay with the current system? What do you think would be the standard deviation? If we remain with the current system, what do you think will be the standard deviation? Where are they getting 11.18 from? I've seen two students getting 11.18. Where are they getting? Where are they getting 11? Calculate. Who told you that 125? Who told you that 125 is a variance? Who told you that? Ladies and gentlemen, listen. If we continue using the current system, it means that every time, all the time, our delivery cost will be what here? 125, 125. And if it will be 125, 125 like that, if you try to calculate the mean will be 125. Mean will be 125. Meaning that 125 minus 125 will be 0. So there is no deviation. So the deviation here will be what here? Somebody see? 0. The deviation there will be 0. The deviation there will be 0. No deviation. Because every time we'll be carrying 125, 125, like that. So there is no deviation between the costs we're having there vis-a-vis the mean, which is 125. Somebody is telling us that somebody called Mburu. Somebody called Mburu. Ladies and gentlemen, what do you understand by the word standard deviation? What do you understand by the word standard deviation? Because the way I understand the standard deviation, ladies and gentlemen, is that it is x, the values, minus x bar. Then what here? Squared, times whatever. If, for example, the x values, all of them are 125, and the x bar itself is 125, right? So there is no deviation at all. There is no deviation at all. No deviation at all. Yes, there is no deviation at all. And if there is no deviation at all, then straight away, ladies and gentlemen, that means that the current model has a 0 deviation. Even at your own time, you can try doing this. Just take, for example, a scenario where you have got X, like say 2, 2, 2, like that. 2, 2, 2, like try calculating the standard deviation of this. Even right now, but I don't want to go into those. You can just understand straight away that whenever you've got uniformity of values, 125, 125, 125, then automatically there will not be any standard deviation. The standard deviation will be what here? 0. So remember, risk averse prefers a lower standard deviation. So in this case here, risk averse will prefer this. Risk averse will prefer 0. Why? Because it is lower. It is lower. We prefer 0 because it is lower. And therefore, if we are looking at an investor who is a risk averse, the risk averse investor as compared to 0 and 17.610 is lower. So ladies and gentlemen, the risk averse again will stick with the current. So risk averse will stick with the current. Will stick with the current alternative. With the current alternative, and of course, in this case here, the cost for this person will be 125. The cost for this person will be 125. Will be 125. Will be 125. The cost will be 125. How about this person being a risk taker on the same basis? Remember, it's about risk. Risk is about standard deviation. So risk taker will always go for the most risky. Most risky, in this case here, high risk. So this is the high risk. Remember, these risk takers have an appetite for what here, somebody? High risk. In this case here, they have an appetite. For risky ventures. They believe in those probabilistic distributions. They believe in gambling. That is why all risk takers, ladies and gentlemen, always get them, for example, betting. Because they know out of betting, there is a chance of them hitting the highest. So here we are. So for risk taker, in this case here, risk taker will advise them to introduce. So high risk, for them 17.61 standard deviation will work for them very well. Implying, ladies and gentlemen, that risk takers here will prefer their own in-house. Will prefer their own in-house. Great. So somebody is telling me to repeat something important there. Risk neutral. So risk neutral always advise using EMV. They always work with what here? The best EMV. I don't know whether that's what I explained, but most importantly, you're supposed to know that risk neutral always advise them using what here? Using EMV. And of course, for them, they'll always go for what here? For the very best. The very best if you're comparing between 125 and 129. It's their cost, so the lower one. So you went for what here? Somebody 125. Now, can somebody help me now repeat these things? Can somebody in this case here help me explain risk taker? Because I think I've done my very best. For risk takers and gentlemen, they always go for the risky ventures. The ones in this case that have got what here? The highest standard deviations. So here we have got two. One has got 0. The other one has got 17.91. The one that has got a higher standard deviation automatically, ladies and gentlemen, becomes what these risk takers here will love. And risk averse will run from. Yes. Thank you very much. Great. But again, somebody should be able to assist us, should be able to shed more light on that. Ladies and gentlemen, that is a small thing. You'll be able to see how we'll be able to build on this. I'll be able to build on this to be able to go to something very good for your exams. Now, from there we have this general CVP. The general CVP that I would want you to know, CVP is cost, volume, profit. Cost, volume, profit, I'm so sure you guys have been reading something on this. True or false? Cost, volume, profit. Have we been reading something on this ama hakuna? Iko ama hakuna? Olivia anasema yes. Yes, Carol anasema yes. Masi anasema yes. Yes, thank you very much, Abdi. So the most important thing that you're supposed to know for this CVP, ladies and gentlemen, is quite a simple thing. Have you ever heard of CMR? Is there anybody who has ever heard of CMR? CMR? Yes. So CMR stands for contribution margin ratio. And for us to be able to get this CMR, we normally take CM over who? Over price. Yes. We normally take CM all over price. We normally take contribution margin all over price. Contribution margin all over price. Very important for us to appreciate this. And then, ladies and gentlemen, in this case here, you will come under, of course, remember that VCR plus CMR is always equal to who? Is always equal to 1. Is there somebody who has ever seen this equation somewhere? Olivia already has given me something. That VCR plus CMR will always be equal to 1, where VCR stands for, I like this, VCR stands for variable cost ratio. Variable cost ratio. If you take the variable cost ratio plus the contribution margin ratio, the two added together must always add up to 1. Now remember that this CMR, if you remember, this CMR is also known as the CS ratio. Is also known as the CS ratio. Contributions to sales ratio. Contributions to sales ratio. Great. Now, ladies and gentlemen, I would want to try you out on this something small here. Something small here. Can I rub this? Can I rub this? Thank you very much. Thank you very much. Thank you very much. So, ladies and gentlemen, if you go to, of course, we know, if you go to, for example, you go to a question, and then you get a question telling you that total cost equals 4 million plus 0.6 sales, 0.6 of sales. And then somebody needs you, required, determine the break-even sales amount. 2 marks. Determine the break-even sales amount, 2 marks. Juliet, you came in too late. Hata wewe umesema wait too late. I'm so sorry. Can somebody in this case here take a screenshot of that particular working tulikuwa nayo? Atume tafadhali, not working but right up tulikuwa nayo, atume kwa hiyo group yetu tafadhali. Tafadhali, for the sake of our great sister Juliet, very active kutoka SGE wapi. Hawa ni wale wanafunzi ambayo mimi nasaidianga sana. Hata akianguka huwa nampeleka Kasneb, tuna appeal na yeye, na haiwezi kaanguka. Kuna wanafunzi ambao vile wanachangia huwa nawasaidia wengi sana. Hata mimi mwenyewe na doubt nasema huyu haiwezi kwa alianguka, nampeleka mwenyewe. Sisi tunafanya any favor na sababu najua kuna mwanafunzi vile anachangia, sisi ni werevu lakini anachangia. I'm able to tell this student akianguka then it must be the examiner's problem. Abdi, thank you very much. At break-even point, profit is 0. I love that. Also, Abdi is quite an avid supporter, contributor. You can see what Abdi Ibrahim has there. Break-even point is fixed cost over CMR. Thank you very much, Abdi. But how come the other students are not even talking to me at all? How come the other students are not talking to me at all? And yet they were ready for exams last week. Ama hawakuwa ready. So can I work it out? Somebody, instead of being Christopher, quite a good point, but no. Can I work it out very fast? Please talk to me tonight. Carol says yes. Anita says yes. Thank you very much. Let me just do it. Let me do it. So, the gentlemen, what they're telling me is that to get revenue break even, total revenue equals total cost. Very good points, but trust you me, they can't help you in this scenario. They cannot help you. They can't help you. So revenue break even, you can write this in full. This is revenue break even equals fixed costs over CMR. Fixed cost over CMR. So, ladies and gentlemen, Beth, you are right. But remember here now, what kind of sales do we have here? This is sales in terms of money, not physical units. We normally use fixed cost over contribution margin when we are accounting for break-even quantity. When we are accounting for break-even quantity. When you are accounting for break-even quantity. But now here they want us to account for break-even sales. So it will be fixed cost over contribution margin ratio. But now look at this. This will be known as what type of a cost? The cost which does not have any association. The cost which does not have any association with units sold or with sales. Thank you very much. This will be called fixed cost. So I'm quite assured of what here the numerator. My numerator, good. Now, how about this? Point 6. Is it variable cost per unit really? No, it would have been per unit if this was X. But this is what your sales, perhaps to differentiate between what you guys are thinking about, then allow Mwalimu to use sales what year revenue, if this really will help out. For you to appreciate that this is sales in terms of money. In terms of money. And whenever this thing is given in terms of money, then the 0.6 that you are seeing here is called variable cost what year? Variable cost ratio. If this was X, listen, if this was X, then 0.6 would have been variable cost per unit. But whenever this is in terms of money, then the 0.6 becomes variable cost to who? Ratio. Variable cost ratio. Now, but I don't want variable cost ratio here. What I need down here is CMR. Fortunately, I had a good teacher who told me that there is quite a great relationship between CMR and VCR, which I want to believe that you haven't forgotten. Is there somebody who remembers VCR and V? Yes, yes. The two, I'll come and tell my examiner, but CMR plus VCR should always be equal to 1. And if I know that VCR is 0.6, then my CMR will be 1 minus 0.6. My CMR will be 1 minus 0.6, which gives me 0.4. Which gives me 0.4. Are you able to hear me, my great students? Are you able to hear me? Are you able to hear me and as well see me? I believe you are able to see me. Yes. So, Abdi, if you are hearing the sound alone, what is happening is that your internet is poor. What you need to do is to sign out very fast and then you get back. You sign out very fast and then you get back. Sign out very fast and then you get back. I'll be able to readmit you. Now, I saw Teresia lifting up her hand. Teresia, I would want you to do what? To kindly ask your question in the comment section. Or rather, if all of us have muted ourselves, which I want to believe all of us have done that, let me give Christine Karaoke a chance of asking a question live. Can I unmute her? Have we muted ourselves? Or it's by mistake? Okay. Because I discovered whenever I unmute someone to speak, and then some students in this case here have not muted themselves, I'll produce very poor quality video. I can only, in this case here, agree to unmuting a participant when I'm recording if all of us adhere to the rule of muting. All of us. Otherwise, I'll get a video which really doesn't make sense at all. So I'm being told if CMR is 0.4, then the sales revenue to break even will be fixed cost over CMR. It will be 4 million over 0.4, which I'm being told is 10 million Kenya shillings. Is 10 million Kenya shillings. Thank you very much. Now, at times, ladies and gentlemen, as examiners, we appreciate that students have really done these things and they have understood them at a very different level. So now I'm given a chance to test my students. What I'll normally do in this area, I'll give them this kind of a question. I'll not give them a question that is that direct. I'll twist and give them this kind of a question like the one that came in November 2019. I'm not so sure of the question itself, but I know it reads BD Limited in November or May. BD Limited operates a single retail outlet. BD Limited operates a single retail outlet. Is there somebody who can tell us which sitting that it's either in November or in May 2019? BD Limited. So Ruth is saying May 2019, question number 4B. 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 BD Limited. So is there somebody who is able to share with me that question on WhatsApp? Please share that question with me on WhatsApp. There's a question that Ruth has, which I would really request that she shares it perhaps on WhatsApp, and then every other student tries them. Otherwise, here I'm doing questions that I feel I should do. Those questions that I feel I should do, not unless you want me to do your questions. Given the experience I have, allow me to do my questions like that. But of course, if there is any banning, for example, somebody who is working for CASNET, right? Do you think this? So tell us. But it's important for you to give all the students here a chance of attempting those questions, because at the end of the day, you could be having a solution internally between yourselves. So is there somebody who has been able to share that question with us on WhatsApp? Let's check. Or even here as an attachment. Very good. Mary and Esther, they have already shared. These are great students. Great. So question number 4. Are you sure it is this one really? BD Limited. I'm not seeing it here. Not better line. BD. There is one with BD Limited. Which question is that, somebody? BD Limited operates a single retail. Not the ones that they have shared with me here. Let me see what David has. Yes. That's how God works. Beth says that is the exact question she was asking. It's May 2019, I'm told. It's May 2019. Question number 4B. BD Limited. Are we there? BD Limited. Are we there, somebody? BD Limited? They're not talking to me. BD Limited, right? Thank you very much. So please, if you don't have the question, you would rather say, I don't have it. We keep on sharing it on WhatsApp until you get it, because otherwise, being online, really looking at how the Mwalimu is doing the question, if you don't have one, is pure nothing. So we are told here, BD Limited operates a single retail outlet which sells directly to the public. The profit statement for the months of March 2019 and April 2019 are provided as follows. So I can see sales. Perhaps I could copy this. So I can see sales for March and for April. Sales for March and April. So what are they giving me, ladies and gentlemen? I can see sales for March. I can see 8,000. April, I can see 9,000. Then we have cost of sales. Very interesting question. Cost of sales, we have 5,000. And then we have 5,500. 5,500. So you're supposed to subtract this for us to be able to get gross profit. So my gross profit, ladies and gentlemen, here is 3,500. 3,500. So from there we come and less expenses. So the expenses, what am I able to see for the expenses? For the expenses, ladies and gentlemen, this is what I have. Expenses, ladies and gentlemen, I have selling and administration. I have selling and admin. Selling and administration, we have 800, 900, 800, 900. We have administrative costs, administrative costs. Administrative cost, what do we have here? We have 1,500, we have 1,500, and then we are able to get, this one is supposed to be selling and distribution. Sorry for that. So now the other last one becomes administrative cost, 1,500, 1,500, and then now we have our net profit, net profit, net profit. Ladies and gentlemen, the net profit here is 700 and 1,100, like that. Great. Great examiners. This examiner is a great one. So required, using the high-low points technique, identify the behavior of cost of sales, selling and distribution, and administrative costs. And then they are giving us 6 marks for free. 6 marks for free. Who can in this case here say that in an exam they would have gotten 6 marks, all of them, in that question? How many of us can say that they would have gotten the 6 marks in that question? Me. Mengit says 4 is 4.5. Is there somebody who is saying for sure me I would have gotten 0? Please don't cheat anybody. Don't cheat anybody. Is there somebody who is saying in that I don't even understand in this case here what that question is all about? Carol says 6. Is there somebody in this case here like Beth? Ruth says 2. Ladies and gentlemen, Christopher 4. You're lying. You're lying. I'll tell you why. This thing, it's either you get a 6 or you get a 0. There are no 2 ways about it. It's either you get a 6 or a 0 or a 0. Buru is very confident saying, I would have gotten a 0, and that is why you will never forget now this after I do it. So we start with the first one, which is the cost of sales. We start with the first one, which is the cost of sales. So cost of sales. So we have in this case here our X and our Y there. X and Y. So then, gentlemen, remember X is normally the activity, the cost driver. So here they want us to break down the cost of sales using the sales parameters. So sales, and we only need 2 sales. Fortunately, they have given us sales for March and sales for April. So now here we have 8,000 versus 9,000. And then we have the Y. So this is the sales. This is the cost of sales, which they want us to break down. So we have, sorry. So please don't confuse the cost, which is to be broken down using the high-low method, the variable to be broken down using the high-low method has always to go to the Y, must always go to the Y. So cost of sales is here. Cost of sales is here for March, 5,000, 5,000, 5,000, and then 5,500, like that. Let's read the question again. Please let us read this question again to appreciate exactly what this examiner wants us to do. So he asked us, using the high-low points technique, identify the behavior of cost of sales, selling and distribution costs, and administrative costs. Remember the concept of cost behavior. But we've got 4 types of costs under behavioral classification. There are those costs which are linear in relation to sales. Those costs which are what are fixed in relation to sales. We have others which are stepped. We have others in this case, ladies and gentlemen, if you can recall, semi-variable. We don't want to go into those details. So they would want us to break down the cost of sales using the sales figures given. And they want us to use a high-low point method. Ladies and gentlemen, tell me tonight. High-low method normally makes use of how many points? Normally makes use of how many points to do the breakdown? High-low method. High-low method. Only two. Unfortunately, they have given us the 2 points. We have the month of March information and the month of April. And then remember that a high-low method, ladies and gentlemen, this being a cost, will be used to develop equations of this form, where cost equals A plus BX, like that. Where B is the gradient. B being the gradient, we know that to get the gradient, we normally talk of change in Y all over change in X. Gradient is normally change in Y all over change in X. So do we have the Y? Yes. So that change will be 5,500 minus 5,000 all over the change in X, which will be 9,000 minus 8,000. Remember, you're taking here the higher value minus the lower value. Remember, this is the higher point, and this is the lower point. So it is a higher minus lower, higher minus lower. So who is able to give us the gradient in this particular case? Please help me. Olivia tells me 0.5. 0.5, thank you very much. So the gradient here is 0.5. So B is 0.5. Now, ladies and gentlemen, let me ask you a question. Having gotten this gradient, what else do you think are we going to do for us to be able, what do you think shall we do for us to get A? What do you think shall we do for us to get A? Please talk to me tonight. Please talk to me tonight. What do you think shall we do for us to get A? And the cost of sales. They're not talking to me. They're not talking to me. They want us to go and sleep. They want us to go and sleep. They're not talking to me. So, ladies and gentlemen, what we're going to do is to substitute. We work with any of these 2 points, yeah, and then of course we form an equation. So could you kindly try forming an equation for me using the highest? Form an equation using the highest. So form an equation using the highest. So using the highest point or lowest, doesn't matter, whichever, we'll end up getting the same figure. So using the highest and plugging it in here, we are plugging it in here. What is the total cost? It's 5,500. The total cost here is 5,500 equals A that we do not know plus B that you guys have given me a figure of 0.5. B is 0.5. You've given me this figure of 0.5. So BX, remember X is here, the highest. So we have here 0.5 times 9,000. So then, ladies and gentlemen, if that is the case, then this will be 5,500 equals A plus 4,500. Implying that A will be equal to what, somebody? Implying that A will be equal to 1,000. And therefore, the cost of sales will be equal to A that is 1,000 plus B that is 0.5, what here, somebody? X, like that. Cost of sales. Please ensure that you write your cost of sales equation nicely there. Write your cost of sales equation nicely. Write your cost of sales equation nicely. write your cost of sales equation nicely. Cost of sales is up there. Cost of sales is 1,000 plus 0.5 x. Because after I get the values of A and B, I need to come and plug them in. I need to come and plug them in for us to be able to get A and B here, for us to be able to get an equation. And now, ladies and gentlemen, what do we discover about our cost of sales? Is it a purely fixed cost? Is it a purely variable cost or a semi-variable cost? Tell us there that cost of sales is a semi-variable cost. Is a semi-variable cost. That is the behavior pattern. It's a semi-variable cost, yes. That cost which is partly variable and partly fixed. Partly variable and partly fixed. So, ladies and gentlemen, I've been able to do, remember what this examiner wanted us to do. This examiner wanted us, ladies and gentlemen, to do three things. To identify the cost behavior pattern of cost of sales that I've done, and then I would expect you to do the next one. The next one, ladies and gentlemen, is selling and distribution. So write their title, selling and distribution, cost behavior. Selling and distribution cost behavior. That's what you write, and I'll give you exactly 3 minutes. 3 minutes. You try doing it, and even if you don't get it right, no problem. So long as at least you try appreciating what you're doing. So I'm giving you exactly 3 minutes. Now, ladies and gentlemen, let's repeat this again. Let's repeat this again. Let's repeat this again very fast, very fast, very fast, very fast, very fast. So it is selling. Let's repeat this again. It is selling and the distribution cost behavior. So then what we need to do is to come and have our X here, which is our sales. Sales that you've given me as 8,000 and 9,000. And then now we have our Y, which is our selling and the distribution, right? Which you gave me 800 versus 900. Ladies and gentlemen, don't forget, in cost behavioral classification, we always have what here on the x-axis? We always have the sales here. On the y-axis now, you can have whichever cost you want to analyze. You can have whichever cost you want to analyze. Now that they have given me this particular information, then, ladies and gentlemen, I need to come and give them B. And how do we get B? To get B, we normally talk of change in Y over change in X. To get B, change in Y, we are looking at the difference between the two. So then we have here 900 minus 800 divided by what here, somebody? 9,000 minus 8,000, which at the end of the day will give us what figure, somebody here? 0.1. 0.1. Using, in this case here, using whichever the highest, using the highest. So using the highest or lowest doesn't matter. And of course, given that we are substituting in the cost equation, we know that cost equals A plus BX. So in this case here, my C, total cost. What is the total cost? If I'm using the high, total cost I know is 900, which will be equal to A that we do not know. So A plus, I'm following this, plus B, which is 0.1, times the X for the high, if I'm choosing the high, X, which is 9,000. So then this one here will be 900 equals A plus 900, implying that A equals what here? A equals 0. Implying that, therefore, A equals 0. And the moment you have been able to get that particular parameter, you've been able to get this particular parameter here, you've been able to get this particular parameter here, A as 0. So please go ahead and write our major equation for us. Write our major equation for us. So from here, what we are saying, if I repeat again, this is 9,000. So remember, this will be 900 equals A plus 900. Therefore, A will be 0, like that. So then if that is the case, ladies and gentlemen, we can see our cost equals A plus BX. Our cost will be equal to A, which is 0, B is 0.1, X like that, implying that our distribution, selling and distribution, is purely a variable cost. It's purely a variable cost. It's purely a variable cost. So that is it. Now the last one you guys should be able to do for me. Ladies and gentlemen, for administrative costs, I have here administrative costs. There are two there. The admin cost, correct, yes. Admin cost, there are two of them. What figures do we have? Somebody there? Admin cost, there are two of them. What figures do we have? Somebody give me the figures. For admin cost, what figures do we have? What figures do we have for admin cost, the two of them, for the 2 months? For the 2 months, what figures do we have? 1,500, 1,500, no. Or 1,500, 1,500, yes. Like that, for the 2 months. Remember, this is my Y. And then, of course, I have my X, which is what here? Sales. Sales, and I've gotten used to them. We have 8,000 versus 9,000. So, ladies and gentlemen, if that is the case, then straight away come and give us B, which is change in Y over change in X. So my B will be change in Y, which will be 1,500 minus 1,500, all over change in X. Change in X, which will be 9,000 minus 8,000. So then, ladies and gentlemen, B here will be equal to 0 over any, that means that B will be 0 like that. And then using the high point, what do I have? We have C equals A plus BX. So my cost here, if I'm using the high point, the total cost is 1,500. So we have here 1,500 equals A that I do not know, plus B that you guys have given me as 0 times the highest X value, which is 9,000. So then this dies, meaning that A equals 1,500. A equals 1,500, implying that A equals 1,500. And therefore, I should be able to write the cost equation. The administrative cost equation. Therefore, the administrative cost equation, itakuwa aje? Itakuwa equals A plus BX. A is 1,500, this is 0. So purely my C there equals 1,500 like that, implying that admin cost equals what here? Purely a fixed cost. So then what a good student will do, ladies and gentlemen, is to come and get an equation for the total cost of the firm. Give me an equation for the total cost. So note here, equation for total cost of the firm. So C will be equal to A plus BX. Now you are taking the cost of sales, administrative, and selling. You are adding them. Take if it's fixed cost, take their fixed cost, all of them, add up all of them. Give me the total cost. Itakuja kuwe ngapi somebody? Tuanza na fixed cost. I remember there was a fixed cost of 1.5 million somewhere and a fixed cost of 1 million somewhere. So total fixed cost, if I'm not wrong, should be 2.5 million. And niko peke yangu. Fixed cost. There was a 1 million somewhere. There was a 1.5 million. This 1.5. Oh, so that we don't confuse them, let's just stick with our figures, 2,500. Is there somebody who is able to confirm this with us? Is there anybody who is able to confirm this? How about variable cost? I remember somewhere there was a 0.5x and somewhere there was a 0.1x. Thanks, Elim. There was a 0.1x somewhere and there was a 0.5x. So meaning that the total variable will be 0.6x like that. This is a very important equation for me, especially in the context of the next question. So the next question, ladies and gentlemen, what are they asking us to do in the next question? What are they asking us to do in the next question? 0.5 plus 0.1. Thank you very much. So in the next question, they want us to draw a contributions chart showing break-even point. What a good student will do, ladies and gentlemen, from this equation, first of all, before you draw, please give us what here? Give us the break-even point using a formula. The first thing you need to do is to give us the break-even point using a formula. Using a formula. Is there somebody who is seeing this kind of mathematics here for their very first time? They've never seen this kind of a thing anywhere before. Please be very frank with me. Be very frank with me. Be very frank with me. Is there anybody who is seeing these arithmetics we have done here today for their very first time? For their very first time. They've never seen them before. I've only seen two students. Saying yes. Then you guys, either you don't have access to our videos, or if you have access to our AMA videos, you're not watching them. So the question is, do you have access to AMA videos? Do you have access to AMA videos? Drawing, even before I start drawing of my contributions chart, ladies and gentlemen, out of this equation, I should be able to calculate the break point. Is there anybody who has been able to calculate that break point from this? Breakpoint sales. From this, the breakpoint from this. Already leads to 𝒐𝒏𝒈𝒄𝒄𝒄𝒄 your stage. From this. No, not 5,000. Not 5,000, Abdi, not 5,000. Now, ladies and gentlemen, remember that once you see this 0.6, this stands for what here? It stands for variable cost ratio. Because remember, this was sales in money, so sales revenue. So the 0.6 is the variable cost ratio. So I need to come and demonstrate broad and deep understanding of the subject by showing them that CMR will be 1 minus this 0.6, which gives us 0.4. And once I do that, Caro, look at this. Once I do that, then I should be able to give them the break-even point. So the break-even point in terms of money is what we call revenue break-even, which will be F all over CMR. F all over CMR. So my F, ladies and gentlemen, my fixed cost, ladies and gentlemen, in this question is 2,500. CMR is 0.4. So then this one here will end up giving me what figure, somebody? What is 2,500 divided by 0.4? 2,500 divided by 0.4 gives me what figure? $6,250. Thank you very much. So once I get these, I can easily cheat the examiner that I've drawn this graph myself. I will very easily, even if I don't know how that graph is drawn, once I've gotten the break-even point, I will very easily cheat this examiner. How do you normally cheat these examiners in drawing this? So having gotten this 6,250, so this is what I'll do to cheat my examiner. Allow me to show you how to cheat this examiner. Remember here, we are only dealing with one product, Yeah, one product. Not like in the case where you have 3 products, A, B, C. So for one product, if you can remember very well, one product, ladies and gentlemen, we are going to have one straight line. So the straight line will be like this. I must have a negative here. Now, ladies and gentlemen, do we know what the firm's fixed cost is? Remember here, we should have profit, and here we should have what here? Sales. Do we know what the firm's fixed cost is? They don't know. Do we know what the firm's fixed cost is? 2,500. 2,500. I'm being told 2,500. Yes, thank you very much. So remember, profit-wise, when we're not selling anything, then the fixed cost becomes a loss. So you're supposed to talk of minus 2,500, and you know that this thing must pass via what here? Via 6250. Must pass via 6250, right? And then now you get your ruler, and then you draw like this. And then up here, you write contribution, profit, line. You underline. Your examiner will give you all the marks. Show the examiner that this is a profit or a contributions area. So this is a profit or a contributions area. And then this is a loss area. That is how you cheat your examiner. So your examiner will think, and if you want even to make it much better, you can even come and show this examiner. Remember, you had the two sales amounts. Remember, you had two sales amounts. Ulikuwa na sale ya 8,000 na sale ya 9,000. Wacheni wafunze ukora. Wacheni wafunze ukora. Ulikuwa na sale ya 8,000 na sale ya 9,000. Unazikumbuka hizo figures kweli? March was 8,000. April was what here? 9,000. And if I remember well, we even know the profit. Profit ilikuwa inakuja ngapi somebody? Profit ya 8,000 ilikuwa inakuja ngapi? Profit ya 8,000 ilikuwa inakuja ngapi somebody? Profit ya 8,000 ilikuwa inakuja ngapi? I'll show you how to do it properly, but I just want to show you how you survive. I want to show you why my students keep on getting awards, and yet most of them are not really smart. They are only street smart. They know how to survive. They know how to survive. So they're telling me this is 700, and then the other one is what here, somebody? Was it 1,100? The other one was 1,100. Yes. So ukifanya namna hiyo, graph ikiwa na 4 marks, na nione mwanafunzi amefanya hivyo, nitakupatia 5 out of 4. Hiyo ndio kuwa namna gani somebody street smart. Street smart. And remember, ladies and gentlemen, that these particular graphs are normally 2. We have what we call a multiple chart CVP, of which I'll be able to show you how to do it also in a smart way. And then now we have got this one where you are not told how many products are. You always assume it's one product. For one product, you always do one straight line like that. Now, ladies and gentlemen, number 1, I don't know whether there is any student who has been able to pick some trick from whatever I've been trying to explain there before I show you how to do it in the right way. Is there somebody who has been able to pick a trick? Like in terms of calculating this 6250, is there somebody who has been able to pick some trick from here? Great. Great. You can never go wrong. You can never go wrong. You can never go wrong. Now, ladies and gentlemen, listen here. Listen here. Now, this is how you do it if you want to go to heaven. For those of us now would want to go to heaven, those ones who don't want to cheat the examiners, this is how we will do it. So we have sales here. So we have sales 0, 8,000, 9,000. And then we have our cost here. Our cost is 2,500 plus 0.6x. So if you want to go to heaven, you must always draw this table, and then you do what? Introduce 0. 0 for purpose of your graph. Introduce 0. So when sales is 0, what will be the total cost? Somebody, when sales is 0, what will be the total cost? When sales is 0, what will be the total cost? Substitute here. When sales is 0, what will be the total cost? 2,500. Thank you. Like that. because it's 0, so 2,500. What about when sales is 8,000? When sales is 8,000. When sales is 8,000 here, our total cost will be 2,500 plus 0.6 times 8,000, which gives us what figure? So they're telling me 7,300. And then now we have 2,500 plus 0.6 times 9,000. 2,500 plus 0.6 times 9,000 will give us what figure, somebody? 7,900. Now from there, kindly give me the net profits. So net profit, you subtract. The first one, we know it's sales minus cost. So this gives us minus 2,500. 8,000 minus 7,300 gives me what figure, somebody? 8,000 minus 7,300 gives me? Give me the old profit that I'd gotten. Give me the old profit. 700. And then the other one will be 9,000 minus 7,900, which gives me 1,100. Which gives me 1,100. Are these two figures familiar? Are they familiar, those two figures? Yes. Thank you very much. Now, after that, ladies and gentlemen, yes, thank you very much. Great. So now go ahead and now draw the graph for us. It's a contributions graph for one product. Contributions and the profits are the same. So please go ahead and draw the graph for us. So then for the graph here, sales 0 to 8,000, I would rather do 1,000, 1,000, 1,000. Yes. So we have 1, 2, 3, 4, 5, 6, 7, 8. So we have 0 here, 1,000, 2,000, 3,000, 4,000, 5,000, 6,000, 7,000, 8,000, until I meet the highest, 9,000. And then the other one, I can see 500. So if I go 500, need 5 boxes downwards. I'll be able to adjust my camera. So we have here 1, 2, 3, 4, 5. I must adjust my camera, but before I do that, so we have 1, 2, 3. Up there, I don't need so many. So I'm doing minus 500, minus 1,000, minus 1,500, minus 2,000, until I reach the minus 2,500. I have to adjust my camera. And then up we have 500, we have 1,000. I don't need so many because the highest profit is 1,100 positive, is 1,100. Great. Great. So now, ladies and gentlemen, please go ahead and map out. You map out the points that you have. Map out the points that you have. So like now, the first point that I have here is sales. Remember this axis here, we have sales. The first point that I have here, this axis here, we have profit. The first point that we have here is 0 versus 2,500 negative. So this is 0 minus 2,500 is there. From there, we have sales of 8,000 versus 700. So where is 8,000? It is here. 8,000, of course, 700 will be somewhere in between. Sorry, this table of mine is not supposed to be there inside. From there, ladies and gentlemen, we have the last one, which is 9,000 versus 1,100. So 1,100 should be somewhere here. Now, remember when you're drawing, ladies and gentlemen, a straight line, you don't even need 3 points. You don't even need this 9,000 one. You need only 2. The moment I have this 700 and then, ladies and gentlemen, I need to come and have my ruler. I need to come and have my ruler, and then I capture my points like that. Try to ensure that they are really connected. Like that. like that. Please don't forget that they asked us to show the profit or contributions area and the loss area. This is a loss area where, of course, we expect these are the losses. And these are side here is the profit like that. So I would want to know whether there is anybody who has been able to finish up to there. Is there somebody who has been able to finish up to there? Is there anybody who has been able to finish up to there? Mengit says, me, Olivia, yes. And Rita, me. How about the boys in the room? How about the boys in the room? The boys in the room. The boys in the room. The boys in the room are not speaking. The boys in the room, usingizi mewagonga. Abdi says yes. So, ladies and gentlemen, so many of them are reading. There is one who has told us 6250. There is one who is telling us 6250. Buru 6300. Ladies and gentlemen, the student who takes this ball home is the student who will write their 6250 exactly. Even if your graph is passing through 3000, so long as you've done the computations using the manual approach and you got 6250, that is a figure you put there and you'll end up getting all the marks. You'll end up getting all the marks. So thank you.